Morning, Steve Freed in Chicago with the morning grain comments. Well, happy Friday. It is one of those rare days at the end of the month in which USDA has a report. They'll be coming out with stocks numbers for September 1. They'll also be coming out with a revised small grain crops, including wheat. And then they revised last year's 2017 soybean crop. So all in all, the market's expecting a little bit lower corn and wheat numbers than the average trade guess, and a little bit higher soybean number. We'll be on at 11 o'clock to give you the numbers and the market reaction. We also will be noting that, number one, the weather over the next 10 days is going to be wet across the Midwest. So the question mark is the market going to see a little bit of short covering in the beans and corn if this delays harvest. For the week, bean prices are up about 10 cents, corn 7, wheat's down 9. And for the month, beans are up 14, corn's down a penny, and wheat's down 33 cents. So again, we're trying to stay above season lows, but within a trading range that we've seen for much of the year. For wheat, sales are 20% behind a year ago, shipments 29, USDA is forecasting a 14% increase. Corn sales running 61% ahead, shipments 47, USDA is expecting a 1% decline. And bean sales are running 16% behind a year ago, shipments 18%, USDA is forecasting a 3% decline. So again, wheat and soybean shipments and sales are running behind where the USDA thinks we're going to be. Corn is running well ahead because of the front-loaded demand. International Grain Council increased world 2018 corn production 10 million tons to 1074, mostly due to the U.S., Europe, and Ukraine increases. The USDA is at 1069. They estimated the soybean crop at 370 million tons. USDA is at 369. Last year we were at 339. And they estimated the wheat at 717. That's up 1 million tons from their previous estimate, but the USDA is at 733. So we'll see if based on those numbers, you would think that they would offer some pressure to the bean market and maybe help the wheat market a little bit. But we still need to see some kind of evidence that U.S. wheat demand is going to increase because of this lower world wheat production. And there has been a lot of reports out that leaders of ag companies are saying that a prolonged battle between U.S. and China is going to hurt both the U.S. farm income and also ag business income. So again, maybe a lot of pressure on both sides to come to some kind of resolution. The problem is that it looks like China is going to be reluctant to make any particular changes at this time, and they continue to try to find sources of oil seeds to satisfy their protein demand in a field in which they might be seeing reduced feed intensity of meal in their rations and reduce food consumption of pork in their country. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.